Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now for an extended conversation like we should have her for 3 hours is Wei Li of BlackRock. I don't know where to begin. So Wei Li, let's start, since we're on the Pacific Rim, with Roz Matheson. You were acclaimed in your China for mathematics skills as a kid. You're a student of the Pacific Rim. I don't buy the idea of doom and gloom on China. There's a resiliency there. Do you detect a political, in an American phrase, come to Jesus, where they're going to be able to assert 5% growth?
As a mathematician, one number that jumped out to me just yesterday is 10-year yields in China just dipped to all-time low, below 2%. That is really remarkable. That speaks to markets not feeling confident about China exiting deflationary environment. That speaks to markets being quite worried about Japanification of China. So structurally, there are concerns around Chinese growth.
Is there an embedded deflationary vector right now? I mean, is it Clement Attlee 1930s Great Britain? Is it a deflation that we saw with Japan over the years?
Well, if we look at the consumers in China, they are still quite muted and really quite depressed. There has been effort to stimulate consumption, but that remains below trend coming out of the pandemic. And looking ahead, well, talking about an environment where exports could also come under pressure. So this is why we're less positive over the longer term around where China is heading towards. We're expecting 3% growth by the end of the decade, growth? Which is quite a bit lower than 5% for this year. That's and maybe they're looking at 5% for next year. We're not expecting that given the uncertainty around it. But in the very, very near term, valuation remains quite attractive. We have events coming up around the corner, the Central Economic Working Conference and the National People's Congress as well. So all of that could provide kind of near-term stimulus hopes, but really the longer-term story is really not that encouraging, I would say.
Is the government of China, to what extent are they concerned about really, I guess, isolating themselves from the rest of the world? Do they see that as a material risk? Because that seems to be how it's drifting.
I think geopolitical fragmentation has been happening, has been deepening, and is expected to continue going forward. So that's part of kind of China isolating or building spheres of influence around themselves, but it's also generally the spheres of influence between US and China moving further apart, which is why geopolitical fragmentation is a key megaforce that BlackRock has identified that is inflationary, and that is why we are positioning our strategic portfolios for high for longer.
I want you to come back. Let's start with this question. When should kids start learning calculus? I mean, in America, it used to be you learned it at 22, and then it was 20. Now we got kids freshman year in high school having this, the product rule crammed down their throat. When should kids start learning calculus, Wei Li?
I honestly do not remember when I started learning calculus. Maybe in junior high school. Junior high school,
that's sick.
I was good in school.
Did you drop that in your interview with BlackRock that you took calculus in seventh grade?
But the point is, I don't use calculus these days in my day-to-day job. So what exactly is going to future-proof the future generation in terms of the things that they learn in school, right? As AI changes the nature of jobs.
Listen to her.
So.
It's right in the AI chat. I give up. Paul Sweeney and Tom Keene with us. Wei Li of BlackRock to say she's a global chief investment strategist, barely describes her duties. Look for her on LinkedIn. I think of Yuri and Timmer at Fidelity and Wei Li at BlackRock. Like, not just, hey, this is, what I had for lunch, but like really serious investment stuff. Here's the drill. I'm calling it the Great Bull Market, or this Great Bull Market we're in. There's off the December 18 low up 145% SPX. Off the October 22 low up whatever it is, 40, 60%. the risk of extrapolation now is front and center. How do you handle the emotion that we want to extrapolate this good equity news with the reality of taking measured risk?
I think the big picture right now is not one of mean revert, it's one of transformation. We're talking about an environment where actually the key focus ought to be where the longer term trend is heading towards, rather than where the fluctuations are around what used to be a stable longer term trend. And that is also why we see 10-year yields being so much more sensitive to month-to-month data releases, because we're now in this almost unprecedented environment where longer term trend is actually shifting. That means mean revert does not quite apply when we're talking about transformation and moving targets. And that also means if we think something is expensive, they can get more expensive. If we think something is concentrated, they can get more concentrated if there are good reasons for that to continue.
How did you respond to what David Kostin did over at Goldman Sachs, modeling out, since we've come so far so fast, our central tendency is a low single-digit outcome? Heated complaints from the academic math community on how they went about that study. Are you that cautious on where the terminal value is of equity prices?
We actually took inspiration from that analysis to try to understand if the measure of concentration, which is to look at the market cap of the biggest company versus the 75th percentile, and look at that ratio, right? By that measure, U.S. equity market is close to the most concentrated in almost 100 years. And we try to understand, okay, that concentration, does it have significant bearing on subsequent market return over 12 months, over 10 years? The verdict of that analysis, inspired by the research piece of research that you are referring to, is that over the very near-term horizon, let's say investing for 2025, concentration doesn't have significant bearing. And over the longer term, in a mean revert environment, then it has significant bearing, but we're not in a mean revert environment. So we continue to think that earnings can come through for next year. We're looking at high single-digit return expectation, and there is reason in the context of U.S. exceptionalism for us to lean more into U.S. equities, which is what we're doing for this outlook.
Wait, just tell me I should buy my first share?
I think you should jump into this market. Both feet first, Tom. Jump in there, get your E-Trade.
You should keep your 100 shares.
Exactly.
2 or 3 shares of Apple.
Exactly. Wei Li, so it's been a month since the U.S. presidential election. We now know we have a Republican in the White House. We now have a pretty Republican-controlled Congress, although some very tightly controlled. Did that change the outlook for you folks at BlackRock? When you woke up from the election the next day, did you materially change your outlook on asset allocation, stocks, bonds, U.S., non-U.S.? Did it change your outlook?
I think in equities, America First policies would support U.S. At the expense of potentially global equities. We actually use UK equity allocation to fund the further upgrade of U.S. equities. This is what we did for this outlook. But in government bonds, actually the reverse is true, given the fiscal trajectory that we now expect from the Trump administration, but also specifically in the U.S. We think that there is room for term premium to come back even more in U.S. government bonds, which is why we prefer likes of gilts over U.S. long duration. So there is a different read across in risk assets and government bonds with the policies that we now expect. The last thing I would say, credit is an interesting one. Spread, U.S. IG spread is the tightest since the early 2000s, but that in part reflects number one, reasonably good fundamentals of credit and corporates, and number two, worsening indebtedness for U.S. government, right? So when we look at it from a whole income, total yield perspective, quality income is still a very interesting theme that we want to play.
Are you concerned about, here in the United States, continued deficits, continued growth in the debt? There doesn't seem to be any political will to address that at all, and it might just be don't worry about it. How do you guys think about that?
I would say two things. First, it is not a U.S.-specific phenomenon.
Okay.
I think what's happening in France really shows that this is
Good point.
really across the board. A higher indebtedness is really a phenomenon across the board. Number two, we are risk-on for now. We're dialing up risk-taking, but rate repricing is a key signpost that we're monitoring as we look to dynamically dial up and dial down risk-taking through the course of 2025. So that's definitely something that we pay a lot of attention to related to tariffs announcement as well, because higher tariffs, higher inflation, higher rate expectations. So all of that is really under risk monitor as we keep risk on for now.
One final question. You were sitting in your classes, I believe at Cambridge, and you ran through productivity. The great missed call this year has been American economic growth, resilient nominal GDP. Everybody got the growthiness wrong. What portion of productivity is the why we're achieving right now?
I think U.S. Growth has been very resilient because this is not your typical cycle. I think there are some false alarms, especially during summer, looking at the sine rule, the typical recession signal not working because we are in this environment of transformation rather than standard cycle, right? There are multiple disconnects that point to this is not your typical business cycle. We're looking at an environment where the Fed is cutting rates when financial conditions are very, very easy. Those traditional recession signals not working. So all of that means that we cannot use the old playbook to understand where economy is, but also to kind of think about asset allocation mean revert.
So at the margin, can you buy Mag 7? If we're not mean reverting, and if we're going to a new Wei Li terminal value, can you add to Mag 7 this morning?
Mag 7 multiple is 30 times, and at the beginning of 2022, it was 35 times. At the inception of ChatGPT, late 2022, it was 25 times. So it is expensive, but it's not extremely expensive. There are good reasons, earnings momentum that supports those valuations. You know, like mean revert. If we're talking about an index that has become more growthy in nature over time, then the mean needs to reflect the more growthy nature of the benchmark. So we continue to like Mag 7, but we have broadened out how we play the AI theme because we expect that to have broader read across to the whole economy. So public market, private market, we are building the transformation, we are financing the transformation.
Wei Li, thank you so much. With BlackRock.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We turn to the litmus paper of the global system. We welcome all of you on YouTube on your commute. Quickly, with George Saravelos of Deutsche Bank. George, whither the dollar, in your view forward, not like the year-end outlook, but the bet on the dollar. Is it a resilient dollar, and can you model out dollar strength?
Hi, good morning, Tom. So it really all is about the policy mix over the next few years. That's how we think about it, the combination of fiscal and trade policy. And the bottom line is, if you think about what is priced, you're still not pricing an aggressive mix of fiscal easing or protectionist trade, which is what President Trump communicated in the election campaign. So we still see the market as pricing on a scale of 1 to 10, roughly a 3 out of 10. And therefore, there is more potential, I think, for the dollar to strengthen over the next few months as we price more in. But over the medium term, it really boils down to whether the rest of the world can solve some of these structural issues which are weighing on both China and Europe. And the longer these things are delayed, I think the stronger the dollar will remain over the longer term.
George, we were just trying to getting an update from one of our reporters in Paris about the uncertainty there, the political uncertainty in France. I'm looking at the euro here as a proxy. We're now below 1.05. Is parity something that you think is possible for the euro with the dollar?
That's our forecast for the euro next year. I think depending on what happens both out of Europe and the US, There are even scenarios where we could go below parity towards 95, for example.
Wow.
I would say the key variable at the moment that is impacting the market and the economy is uncertainty, especially in Europe. There are very high levels of uncertainty across the board, both in terms of the political outcomes, and we're seeing the negotiations around the budget in France, both around global foreign policy. And the difficulty with uncertainty is it's very hard to model the economic impact, but it's very clear that this is showing up. And I think this is one reason why the European economy is underperforming, for example.
Is there a credible bear case for the U.S. dollar? I'm hard-pressed to find one.
So I would say there always has to be, because if there's no way for something to go down, it must mean we're not doing our job properly in terms of thinking about the scenarios. So here are the two downside risks for the dollar. The first one would be if we are wrong about the fiscal policy outlook and we get a material fiscal tightening in the US, whether that is due to an inability to agree to something, although presumably that probability is low given you've had a red sweep. But if you have fiscal tightening, that would lead to slower growth and a more dovish Fed, and I think the dollar would go down. That would be one scenario. The second scenario would be what I would call institutional instability, a challenge of the stability of the institutions in the US. You would see that, for example, if Fed independence was challenged, that would be one that would certainly hit the dollar. And I think one reason the dollar is actually strong is that the market is seeing institutional fragility outside of the US, seeing it in France, seeing it in Korea. And I think that's a key driver over recent weeks of dollar strength.
Tell me about the opportunity in Canada. They got a president who's unloved. They got the tariff worries. George, you're writing about Canada. How do you profit from weak Canada now? Do you go loonie or do you go Canada renminbi? What's the take that Deutsche Bank has there?
I think Canada is going to be an interesting test case as far as President Trump's tariff policies go. So we did see Canada being lumped together with Mexico in a social media post President Trump made just a few days ago, highlighting immigration and the fentanyl epidemic. Now, the interesting thing is, when you compare the flow of immigration and fentanyl in Canada to the US and Mexico to the US, the orders of magnitude are immensely different. Now, that would suggest the odds of an aggressive tariff policy towards Canada are quite low. The market is indeed pricing that, and that is our assumption, which is why we have this view that Canada should be outperforming currencies such as the euro, for example. But let's see. I think if come January 20th and there's no tariffs on Canada, we'll be fine. But there is still a very high degree of uncertainty on that front as well.
George, too short a conversation. George Saravelos at Deutsche Bank. We need a longer conversation soonest. He is with Deutsche Bank and Foreign Exchange, to say the least.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Bowen Haynes in Florida has all sorts of abilities, and one of them is a more conservative path. Joining us this morning is Jay Bowen here. Too short a visit. You are basically not taking in the alternative investment Kool-Aid. To me, this is a story for next year. Where's private equity? Where's private credit going to be 24 months, 36 months from now?
Yeah, with our approach, it's somewhat, we say that we're unconventionally conventional with our largest client, the Tampa Fire and Police Fund. We just started our 51st year. We've never owned private equity or private or the latest, whatever the latest.
So you got a
is.
50% position in Mag 7?
Now, I will say this, which is important. One of our largest holdings, and we decided this several years ago, you can play these markets in the public markets. One of our largest holdings is Blackstone, which is as you know, the largest private equity firm in the world. So we can play these markets in a very efficient, liquid way, including real estate also, without having to go into the more risky corners of those areas.
Tom, as you can probably tell from Jay's accent. University of North Carolina at Chapel Hill. That is
I know.
really bothersome.
This is Merry Christmas, Paul.
Yeah, exactly.
Season
Another
greetings.
Carolina guy coming in here.
Oh boy.
Jay, talk to us about your work with the Tampa firefighters and police. You managed their pensions fund for 50 years?
Correct. My
What is
father
up with
forged
that?
a relationship in 1974. The firm was founded in North Carolina. We were in Atlanta forever. Now we're caught the COVID wave and in the Jacksonville area. And yeah, it's just a very high quality, long-term approach, and it's proven to be, the model is proven to be quite successful, and every year that goes by, we're able to show another set of 20-year rolling data, which they
So
really
what do
like.
you do? That's short term around here.
Yeah.
What are you doing on a 20-year roll? Are you doing a 60-40 split? What is the pixie dust you're doing, like to beat SPX? Is that the goal?
We are certainly oriented towards equities and common stocks specifically. Typically, we're allowed to invest 65% of the portfolio in common stocks on a cost basis, not on a market value basis. Okay. So in a bull market, that's going to move up closer to 70, 75 maybe.
Yeah.
And the balance is, the bond side of the portfolio is strictly for income and stability. We don't trade the bonds.
I got to interrupt. You're running a defined benefit program for a public sector pension fund, and you're popping 65, 70, 75% equities?
Correct, and we've been the sole manager for 50 years, and according to all the public fund databases...
Are you the number one performing defined benefit program in the country?
That's what they say for 1 year through 50 years, so if you believe the database...
What have you done since December of 2018? Our theme to the end of the year here is this great bull market. What are you up from Christmas Eve 2018? Has you got that number in your head?
I don't have that number in my head.
You didn't expect this,
I've got the 31 separate 20-year rolling increments in my head, but
So what's a type of stock you guys like to own? Do you have a technology bent? Are you owning corporates, financials? How do you guys allocate?
It's top down and thematic. We're trying to get ahead of these trends. Well, currently one of our big trends, we like finding these, we call them technology companies disguised as industrial companies. Companies like Eaton and Corning and Teledyne. You might think, oh wow, these are somewhat Honeywell. They might be industrial, but they're very sophisticated from a technology standpoint. They're helping electrify and digitize the industrial base. There's a lot of demand and massive tailwinds in that area that we see going forward.
Do you guys have a value? Let me actually put it to you this: what is your valuation criteria? How do you think about valuation? Because you could look at some of these names, whether they're Mag 7 or just some other technology names, and really have to, have some gumption here to buy some of these things. How do you think about valuation?
Correct, and that has really changed over particularly the last 15 years or so, where it's a much more dynamic type of approach. We've always looked ahead. We're not really that concerned with current earnings.
Okay.
With our long-term approach, we have the luxury, and they've given us, the board down there has given us the luxury of really looking out. So a company that might look expensive on a current basis, if we look out and feel like the tailwinds are there and the trends are there, we're willing to pay up a little bit for it.
Tell me about Florida. I mean, I make jokes about it, but it's not funny. Tampa's stadium was destroyed. They're going to play in the Yankees Springs Training Park, I guess. There are hurricanes in the Florida economy. Where is it all 2 years from now? I mean, are we done building 6,000 square foot houses on the water that get blown over?
I think that trend is going to be curtailed somewhat because of the insurance situation down there, which is changing as we speak.
Yep.
But it's still a high growth market state from a economic policy standpoint. Is I think going to continue to attract. But I think that certainly it's going to moderate.
You got to come back. I mean, I can't tell you folks how unusual this conversation is with Jay Bowen, but I just want to know. I mean, I'm certain every meal you've ever taken with the Tampa Union has been at Burns Steakhouse. Are you eating in the bar, or do you go into one of the back rooms? when you're
Well,
at
I
Burns
never
Steakhouse?
get to eat because the wine list is in a phone book.
Have you been in the
And
basement?
I get lost in that phone book, and then it's time to go.
Have they ever taken you downstairs to the wine cellar of Burns Steakhouse, Tampa, Florida?
Yeah, but they maybe put a blindfold on and promise not to tell anybody.
They took me down there once, Paul.
I know.
It's like
I know.
acres.
Right.
It's unreal. I eat in the bar.
Man, it's
I
something
try
else.
to eat right directly across from the bar, and I get better service there, I think. But it's great.
It's something.
Is it written into the Bowen Haynes agreement that you only can dine at Burns Steakhouse in Tampa?
You've given me the idea of the day. There you go.
I think Paul, it says road trip, team
Yeah, I know.
surveillance.
Well, I know exactly where Burns
Tampa
is.
Bay, we'll talk to the firefighters. Jay Bowen, thank you so much on a really exceptional day here for news.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Our newspapers, it's a Lisa Mateo hour. She's not seen Moana 2. Neither have I. What do you got, Lisa?
I know, I definitely not in the movie
This weekend.
spirit. Let's see, where do I want to start? Okay, so we'll start with the Washington Post. They're talking about Starbucks and Nestle. They're facing some scrutiny. This is because of labor practices over in China. They're saying coffee farms and Starbucks, Nestle's supply chains in China, they're not living up to ethical standards. This is according to a report by China Labor Watch. They said they're using kids as workers. They're making workers work excessive hours, different safety standards. So it's an investigation that covered about 26 farms, but it really starts to show how the challenges that these big companies are facing, monitoring labor costs and labor in China. Both companies did say that they pledged to investigate further, but it's just something going on now that they're starting to become more aware of.
Paul mentions his driver. I had a driver this morning, Bentley in the garage, and he said he's just back from Thailand. And he says, do Americans understand those people are making $12 a day? I mean, the labor, Steve Roach called it the labor arbitrage. Yeah. And so this is all
Price
about.
of coffee is up 58% year to date.
Right.
So it's been,
Good point.
it's amazing.
How does Starbucks manage it? Do they hedge
Well,
it?
what's your daughter's latte
Oh,
mocha
the latte
thingamajiggy?
runs me about $8 now.
Yeah,
I think.
exactly. For a
It's
cup of
ridiculous.
For a cup of coffee?
Well, she gets the big one, of course.
The venti.
The venti,
In
yes.
Means
Pittsburgh,
20.
martinis cost $8.
Exactly.
Good
That's
point.
the world we live in.
I need a martini after
Next.
that
Go
latte.
next.
Okay, we go. I might have to ask Baltunis about this next story, but meme coins, they are having a moment. Financial Times saying you can thank President-elect Donald Trump for this. So these are tokens that are representing online viral moments. Things like the euthanized gray squirrel, like the pygmy hippopotamus, the cartoon dog. They've all exploded in value since last month's U.S. presidential election. More established meme coins like Dogecoin, Tom's favorite, they've outperformed Bitcoin over the past month. They've even been joined by a group of new coins. But critics are saying, you know what, meme coins, nothing more than this entertaining asset. Yeah, they say they're reminiscent of the craze from NFTs during the crypto bubble of 2021. But
So traders, I guess,
having a
they're
moment.
betting that the Trump administration will usher in more crypto-friendly attitudes and regulations in Washington. I guess that's the fundamental play behind
that's
it.
the reason. That
No
is the
idea.
reason.
All right, you
That's
kids-
what
you
I'm saying.
kids
I'm
have
not
fun
going
with
to
that.
comment because
You didn't
everyone
think so.
knows where I am on
Yeah,
this.
so just those kids, you can have fun with that. Speculate all you want. Have fun.
Okay, we'll go to sports now. Okay, Juan Soto, you know, he's been having talks with everyone. His agent is saying, from the Yankees, his agent is saying he's starting to eliminate teams from those negotiations.
There's two teams. Let's
Okay,
be honest.
all right. So who has he met? He's met with the Yankees, right? The Mets, Los Angeles Dodgers, Boston Red Sox,
Can
Toronto
you
Blue Jays.
Let's just cut to
That's
the chase.
That's where it is.
We'll give him Plymouth Rock. Good morning, 92.9 Boston. Let's give Juan Soto Plymouth Rock.
Yep.
Join the Red Sox. What do you got? What's the update?
God. So his agent is just saying Juan is a methodical thinker. He hasn't said yet, but he rejected those who say high-spending teams like the Yankees and Dodgers are buying championships. So he rejected that offer. But Soto, what's the history? So he turned down $440 million, 15-year offer from Washington back in 2022. That moved him to the Nationals to trade him to San Diego, which dealt him to the Yankees last December. So he's looking for money. So who's going to give it to him? We'll see. But he's starting to eliminate some of those choices.
Yankees, Mets. I think that's what it comes down to.
When he was on the Padres, there was a pitcher named Snell, who reminds me, Red Sox fans, of Bruce Hurst from years ago, where when he shows up, he's the best pitcher in baseball. And Snell just joined the Dodgers.
Yep.
So for Snell and Soto to be back with the Dodgers is sick.
Yep, it's going to be.
Who's he? Do we know he's eliminated?
No, he won't say. But he's starting to eliminate.
Oh, boy. What I've hear on sports radio is we'll hear something next week, and I'll defer to Ari on that. He knows all that stuff. But
okay, good.
We'll have official surveillance team coverage.
Exactly.
Probably a remote in Boston,
right.
Coming from Plymouth Rock, where they're selling it giving it to Juan Soto. What do you got?
All right, last one. You can now get a pizza and a wedding dress delivered all in one order.
Now we're talking.
The reason why? David's Bridal teamed up with DoorDash. So now DoorDash is delivering bridal dresses in under an hour, if you can believe it or not. But the company really needs it. I mean, you think about it, they filed for bankruptcy twice. But what they thought it would be big because they did test runs with like the accessories, like necklaces, shapewear. They thought that would be the hot thing. But they said, no, it's actually the dresses that women are ordering. Not just wedding dresses, but, you have the prom dresses. You have, the bridesmaid dresses, all those kind of things. So now this is becoming, I guess, the hot new thing. So now
here's the demo, I think, Lisa. 2/3 of brides between the ages of 27 and 28, which is the key demographic for David's Bridal, use last mile delivery service via apps on a regular basis.
Yeah, so that makes sense.
Yeah, we shut that down in my household quick. Yeah. Yeah, that's just I will never pay for that.
You won't. I know. They tried the DoorDash with the McDonald's. Doesn't work either.
Because
but
a
$10 wedding dress.
Yeah, that's something maybe. All right.
Depends on the price of it. I don't know.
Yeah.
But yeah, so that's something new.
Last
Retail,
mile
DoorDash getting into that. So.
Lisa Mateo, the Lisa Mateo Hour. Thank you so much. Newspapers with Lisa Mateo.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.